Hello mga kababayan, good morning. Did you know when you decided to go to the Philippines and establish some kind of residence or retirement residence that you could potentially be in trouble? Have you heard of FATCA? That's FATCA, FATCA requirement, and also the FBAR requirement. That's a reporting requirement by the government. When you went to the Philippines, you just simply brought some money with you. And I know one thing, you know that you're not allowed to bring more than $10,000. That's almost everybody knows that. You cannot put $11,000 in your pocket and not be in trouble. But did you know that there are some financial reporting that you are required to submit as a citizen of the United States, or a dual citizen, or even just a green card holder? There is. And the penalty for not complying with it starts at $10,000. And in one case, it could even include the criminal prosecution. I'm going to tell you about it. Hang loose. Okay, to begin with, I'm going to say that I am not an expert on this. In fact, I did not know about it myself until I heard from someone, and I did some research and I did some digging, and I put together a one-page summary. And I said, I think I should share this with you because this will be very, very helpful. And I was surprised when I learned about this. And so this is designed more for people, individuals, who are going to the Philippines with a plan to retire, brought some money, maybe bought some condominium or single home, bought land, built land or a building over it, and that's it. Okay, I'm not talking about people who are investing in stock market, wealthy people, people that has interest in estates and trusts and things like that, or corporations, because those will involve more reporting or different kinds of reporting, and that will not be covered in this video. This is just for the common person who is going to retire in the Philippines and have some good time, and of course you have to have some money to have some good time, and this is intended for that purpose. And I did this, it took me about 2 days to actually digest and comprehend what is going on and what this is all about. And I had to go through a lot of internet research. Unfortunately, I no longer have access to, I think they call it CCH before, which is a tax library, for me to research on this. So there is some limitation here, and I will tell you what I'm not sure of, what I'm sure of, and what you might need additional information on, or maybe consult with someone who's an expert on the area. Okay, so here goes. FATCA. The other one is FBAR, FBAR. We're going to talk about that next after FATCA, but let's focus on FATCA first. FATCA stands for Foreign Account Tax Compliance Act, and this is by the Internal Revenue Service. Compliance with one, FATCA, does not necessarily relieve you of the compliance reporting on FBAR. The two are completely separate, or vice versa, okay? Now, who is subject to reporting requirement? Citizens, green card holders, and companies. Now, companies are required to report if their client has more than $50,000 on the account, although it appears that there is no such requirement on FBAR. It doesn't necessarily mean that there is none. I just did not see it, or I did not find it. But as of November 30, 2014, Philippines has agreed to provide account information to the IRS. So there is cross-referencing. So if you're hiding money, you're going to get caught. Okay? The deadline for filing is April 15, or if you have an extension, October 15. Now, this is very important. For you to know or determine whether you are subject to reporting, you need to know the threshold. If your account, let's say, is less than $50,000, you don't need to worry about anything. And that is also the reason why companies are required to report anything with a balance of over $50,000. All right. Now, so $50,000 at year end or $75,000 at any time. So, for example, if in June, middle of the year, you had $80,000 balance, even though at the end of the year you only had $20,000, you are still subject to reporting $75,000 at any time. Now, look at this footnote 2. If married filing jointly, that $50,000 to $75,000 is changed to $100,000 at year end or $150,000 at any time. And footnote 3, if you are living abroad, okay, so you do not have any residence here in the U.S., but you are a citizen, so you're subject to filing. Well, they raise the threshold to $200,000 at year end, and it's $400,000 if you're married filing a joint return, or $300,000 at any time, or $600,000 if you are married filing a joint return. Okay, that's very important. Now, in determining these values, this amount, what is excluded? Well, real estate owned, you do not have to report. That is not considered a reportable asset. So you can remove that from your calculation of this threshold amount. So anything that is titled to you directly does not have to be included in the calculation. Now, if your property is, let's say, being held in a trust, that's completely separate reporting, and I would suggest you consult with an accountant or a lawyer to determine what your responsibilities would be. But this is intended only for simple people who go to the Philippines, have some money, and maybe bought real estate. This is it. But this is not in any way an all-inclusive presentation of FATCA. Penalty for non-compliance is $10,000 to $50,000 or as much as 40% of the value of the asset owned. Can you imagine this? If you're a millionaire and you're hiding $1 million of assets and you did not report it, you could be penalized up to $400,000. You could lose 40% of your asset. Now, I know a lot of us are not going to meet this threshold, but suffice to say, $10,000 is a big penalty to swallow. All right. What form do you use to file this? You use Form 8938. Now, this is filed with the Income Tax Form 1040. Now, this is a hard copy form. So, for example, if you're using TurboTax to prepare your tax return, you will be able to find this Form 8938 in the TurboTax form. This filing does not create any additional tax on your part. This is simply information return. You can have $1 million of asset. It doesn't affect the money that you pay the government. This is just information return. Now, we're going to talk about the next one, which is FBAR. This is Foreign Bank Account Report. This is by the Financial Crimes Enforcement Network, which is completely separate from the Internal Revenue Service, although it's also part of the Treasury Department. Now here, citizens and green card holders, just like FATCA, will be required to report. However, I mentioned in footnote 1, I did not see any requirement for companies to report on the FBAR, but it doesn't necessarily mean that they're not required. No such requirement. I simply did not see it. Okay. Deadline is more or less the same as April 15 and October 15 with extension. I saw something where it says you do not have to apply for extension on this on FATBAR, but I'm not sure why that is. Why would they put an April 15 deadline, and then if you're not required to file an extension, why extend it to April 15? Maybe that's only one time when this was first implemented. Now the threshold is $10,000. So as you can see, this is much lower than the threshold on FATCA. So you may not meet the threshold on FATCA, and therefore you are not required to do any report, but you will be required to do a FATBAR reporting. Okay. And again, here, real estate owned is not included if it's directly titled to you. And also, they had another exemption here that I did not see on FATCA. Again, I'm assuming the same will apply on FATCA. I just did not find it. I did not see it. But if you have an account at a U.S. military banking facility, such as former Air Force soldiers, Navy people, and things like that, if they have account at a military banking facility, you do not include that in terms of computing your threshold. All right. So if you have $100,000 in that account and nothing more, well, you don't have $10,000 at any time because you exclude this deposit in this military banking facility. The penalty is $10,000 to over $100,000 and potential criminal indictment. Hefty, hefty, hefty. Now, this report is to be filed on Form 114. However, it is filed electronically, and you can access that through the website of BSA e-filing system, and this is the link where you can access that website. It's really easy once you get the hang of it. It only took me 5 minutes to do the reporting. Okay, very easy. The hard part is understanding and doing the research. It took me 2 days. So again, FBAR reporting and FATCA reporting are not one and the same. They're different. You may not qualify for FATCA reporting, but you will meet this requirement on FBAR, so you will have to report FBAR. Or you may be required to do both. All right? Okay, there you got it. This compliance requirement, don't worry about it because it will not involve any tax or any money on out of your pocket. This is just information return filing. Very important because Uncle Sam wants to protect its interest against money laundering. And I assume you're not a smuggler, you're not money laundering, you're just a person who would like to comply with this. So if in doubt, just go ahead and file. Okay, no big deal. We're not hiding anything. And that will avoid this huge penalty, in my view, exorbitant, but I think I know the reason why they're doing it this way, and that is they want everybody to comply with it, because this is the only way they can track the criminals, the money laundering people, and people who are trying to hide something. Okay, so if you have any questions, please feel free to comment down below. If you have information that you know I'm wrong or I'm right or whatever, please go ahead and comment on it. I will appreciate that. Thank you so much, and please don't forget to hit like and share this information with other dual citizens or expats, because this might help them out too. And please do subscribe on my channel. I will appreciate that very much. Thank you.